The Fraser Valley and Vancouver is about to set the lowest sales to actives ratio that we have seen this year. And I'm going to show you the Fraser Valley starting off with detached at 8.1%. And I think that's about 13 months of inventory. You have apartments at 9.1% and townhomes at 11.6%. So just to show you, let's look at detached first. So detached was at 8% in August. So actually, the sales to actives might be slightly higher. I'm assuming this is a rounded number, so it could be lower, but it's roughly about the same as it was in August. Apartments at 9.1, and it was 9.7 to end August. So apartments are lower than they were last month. Townhomes at 11.6%, down from 13%. So if you aggregate that, because townhomes have come down so much and the other two are roughly the same, Fraser Valley as a whole will probably register its lowest sales to actives listing ratio for the year. Now, sales have been getting better. I believe this month won't be that bad, and I believe we were on pace to have the best September in 4 years. However, there was a whole bunch of new listings that came to the market, people that canceled their listings for the summer and then relisted at the start of September. We had a flood of new listings, and that brings down that overall ratio, the sales in relation to the inventory on the market is registering at a lower percentage because of the new listings. I put out a video 2 months ago saying landlords are about to get wrecked in Canada, and landlords are getting wrecked right now. They are finally selling their properties, and they're selling their properties for big losses. And a lot of the stuff that I covered in this video, I was basically talking about rents are falling, and if you lose your tenant, you're probably already cash flow negative, but now your tenant's going to be paying, $400 a month less than what they're paying before. Now you're even more cash flow negative, and the prices are lower than when you first rented it out. And now you have a very tough decision to make. And I think a lot of landlords, or what I thought in this video, is that a lot of landlords were going to opt into selling that property as opposed to continuing to hold on to it for better prices, because now they're even more cash flow negative than they were before. It was already hard to stomach negative $500 a month. Now it's negative $900 a month. So a lot of landlords are choosing to just get rid of the property. And there's no light at the end of the tunnel, at least in the short term for landlords. Okay, so this is via Dan Foch, Canada's largest rental markets cooling in 2025. You can see that Vancouver fell 8.4% year over year. Toronto's down 6.9%. Vancouver went from 2370 to 2171, and I'm pretty sure this number was close to $2,800 a month at the peak. And then you have Toronto from 2198 to 2046. And then from Ben Rabideau, I don't think people realize how soft the rental market in places like BC could get if current trends persist. These trends are wild. So primary plus secondary rental supply under construction. Primary is like your purpose-built rental condos that are being built specifically for the purpose to rent out. Secondary is like your individual private landlord, and this is rental supply under construction as a share of total rental stock. So of all the rentals we have in existence in Vancouver, every single one, let's say we have 100 that exist, there is about 18% of the overall supply of our rental stock under construction. So if we have 18 in supply in total, or 100 in supply in total, that means we're building 18 to give you the numbers on that, which is a lot of rental stock, which means that rental prices are probably going to continue to go down. And on top of that, we have second quarter population growth for BC, and this is pretty much the only time in the last 2 decades where population growth has gone negative in BC. So we have a whole bunch of supply coming for rental, and we're not growing the population. So we're going to have less overall demand for that supply. I am not saying that if you are a landlord to get out of the market now and sell. But if you are a long-term investor who bought the property to put it in the portfolio and collect the rent, let the tenant pay down the mortgage, and then sell it in 10 years or something like that, you're probably going to be fine, and you're probably going to make a bunch of money on your investment. But the people that are saying, oh, I'll sell it once the prices go up, or I'll sell it once it hits this number, I think that is the exact wrong mindset to have right now, because you are the exact person that needs to be flushed out of the market for the market to recover, right? That's the bad capital that needs to be flushed out of the market before the market can recover. And I've talked about this before. If every single landlord is saying when the prices go back up, I'll sell, then it's going to be impossible for the prices to go back up, because anytime they try to, there's going to be a sell wall of a bunch of landlords who are like, yeah, there's the price I need to get out. Let's list and sell it. And it probably wouldn't happen exactly like that, but I'm just giving you an example. If everybody's thinking the same thing, then it's going to be very difficult for the prices to recover to the price that you need it to recover to. So if I were a landlord and I had the mindset of, I want to sell as soon as the prices go up, I don't think it's logical in a lot of cases. And the reason why is you're probably cash flow negative right now, right? So let's say you lose $500 a month on this property. That's $6,000 a year. That's excluding any additional maintenance costs, right? Let's say the tenant you have now leaves next year and they're paying $2,000 a month and the next person only pays $1,700. Now you're negative $700 a month. And that's whatever that is. That's $8,400 a year. So over the next 3 years, you could potentially lose, whatever that is, about $21,000 a year just in negative cash flow. That doesn't include any maintenance, any plumbing issues, anything that needs to be painted or anything like that. That's your fixed loss every single month over the next 3 years. And I talk to a lot of landlords who don't want to sell because they're like, oh, I want 400 and the price that they can get today is 380. It's that 20 grand, right? Well, over the next 3 years, if the market doesn't go up $20,000, then you're going to lose that anyways, right? And even if the market were to be 20 grand higher, you're still losing that money over the next 3 years. And I think it'll be very difficult for the price to be much higher than that $20,000 you're losing in cash flow over the next 3 years, especially when rents are going down, unemployment may go up, blah, 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 blah. Now, that being said, we could get a massive, rush of stimulus and everything else that props the market back up. That's completely possible. But I think all things staying relatively the same, prices will probably decline into sometime towards the end of next year, probably into 2027. And then in 28, maybe we get that rebound where prices start going back up. But you first have to recover all of the losses that you suffered through 26 and 27 to get back to where you are today at the end of 2025. And then the market has to go up from that point, right? So you might be looking at a mid 2029 hold, and that could be 3.5, almost 4 years of negative cash flow holding that property. And if you're a landlord who is holding on to a property over $10,000, $15,000, $20,000, I think you are running out of time, the time that you have to actually secure that sale and get it sold before the prices drop lower. Because let's say the prices go lower than that $20,000, that minimum amount you need to sell the property. And next year, your tenant leaves. Let's say the prices go down $30,000. Your tenant leaves. Now you're getting a rent that's $400 a month less than the tenant you had before. Now you're in a much worse position. Now you are underwater and you are even more cash flow negative. And that is my concern, and I've seen it play out. I've seen exactly this happen. Unfortunately, I can't talk about it on camera because it was a client of mine that did not listen to that conversation I had with them 2 years ago, and they are likely about to be foreclosed on. I've seen it with my own eyes. I've seen it happen, and that's what I would be worried about as a landlord. Now, I'm not making this video to scare the landlords that are out there. Right? If you're in a healthy equity position, you're well capitalized, I wouldn't be worried at all. I would just expect that there's going to be a bumpy road for the next couple of years. But as long as I have a 7-year long time horizon, or maybe I don't even ever plan to sell it, maybe I'm just going to hold it until the tenant pays it off, then I wouldn't be worried, right? This is more so for the landlords that are just on the cusp, that are hoping for things to get better, that are hoping every rate cut brings higher prices, that are hoping things are just going to get better overnight so they can liquidate that property, get out of the market, and get back to their life. I would definitely consider taking the L now, a bigger L than you want to take, for the sake of not potentially being in a much worse situation come a year from now. And this video is not intended to breach any agency. So if you already have a realtor, listen to your realtor. I am not your realtor. But if you enjoyed this video or you want me to be your realtor, there's a link down in the description. Please like and subscribe. I'm that Agent Kelly. I'm making moves to move you. Peace.